Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the just kind of muddy picture that's on the crypto bubbles here, where everything's a sea of red, except for, punctuated S coins. Guys, we do have a lot of activity on Bitcoin, however, to the downside. And just to start off, I wanted to show you an older chart of the 4-hour Bitcoin chart analysis here because some of you may be wondering, are the levels that I'm giving you the real deal, or is this just kind of arbitrary, right? Because I'm not using support and resistance, I'm using momentum and volatility lines, and that's just something that most people don't have experience with. Now, when price action is going sideways, you cannot understand the direction of the candles without some type of a threshold in your imagination, right? Well, I want to show you just this 4-hour chart that I had made on the 14th here, and just to show you how all these 4-hour candles have played out over that time. And you tell me, was this helpful or was it not helpful to know where the bulls would be in control so that you could have an idea that if we got ahead of that level, could we pump? Well, here we got a rejection from the bullish control zone. So did that, was that level helpful to know that most likely we weren't going to be able to pump if we had a strong rejection from this bullish control zone? Here we had the general continuation, right? And time again, we tried to break above the general continuation, but we just weren't able to. Now, I know when I present this information to you, you may only have the candles over here. And so it just looks like a bunch of lines going to the right. But I'm trying to show you that this is tradable. And look at this, the add or lose momentum. You have to get above this level and close above it, right, in a bullish way in order to get that extra momentum that can push you up. And so that's why I include this level here. It's not always right against the general continuation. And so it is an important level just by itself. You can see where we just have these tiny wicks time and time again butting into the add lose momentum. And every time they hit it, they lose momentum, right? If they break above it, then they have a chance for continuation, just like this one was able to escape, but ultimately bulls were not able to get into control. And then if you look at this level down here, we hold our momentum right to the upside because this was an uptrend. And as long as we were above this level, we could say, hey, we're at least we're on the right side of it, right? Like maybe we have that chance to pump. But look how we broke down, and look how we broke down very cleanly from this momentum level. Again, it wasn't support and resistance. This price action didn't exist before. This is something that I projected into the future. And look at how we interacted with the volatility pivot that is absolutely critical. And every time we bumped into the volatility pivot, we got, just at random because it's volatility, right? So it has randomness to it. Randomly, we got a little push to the upside, and when we were below it, we obviously got a push to the downside. But overall, this chart was saying that it was biased in a bullish way because we were above the neutral point of control. And so, as long as we were above that neutral point of control, there was just a little bit of an edge to the upside. And when we were above the volatility pivot, there's a much greater edge to the upside. And of course, if we're holding our bullish momentum to the upside, then that would give us the best chance. However, we would have to gain that continuation and that bullish control, which we just were never able to do. And so the sum total of all of this is a nice little trading range here, which we could have projected, or predicted where there might be little rejections or bounces off of these key levels to watch. And look what happened when we lost my volatility pivot, which I always tell you, it's so important to have it at our back if we want to pump up. And then if you want a bearishness, then have it over our head. And look what happened when we closed candles. These were just wicks, right? When we closed a candle solidly underneath, we really had that push underneath that volatility pivot. And we also lost the neutral point of control. Look what happened. Okay, and so again, guys, where did we find a bounce? We found a bounce off of that bearish control zone. Bulls weren't ready to give up. They tried to push back up to the neutral point of control, got rejected by the neutral point of control, and after that retest, they said, yeah, we don't have it. We don't have what it takes for this move, and they started to chop back down, and then they gave up the ghost, right? And so now we're inside of this bearish control zone on the 4 hour. And so we have basically a new level, and that's why I'll be showing you some new 4 hour levels. But was that helpful? Can you see the story of the price action in these key levels as I've named them and called them out here? Does it look like I've really missed anything? You know, some of this price action may be some of the key levels on the other time frames, like the daily or the 2 day or whatnot. Okay, and so you know, there's more story to be told than just the 4 hour. But that's why I basically show multiple time frames. Guys, let's go ahead and update this for you. Let's jump to the new 4 hour chart. And so we're just going to, again, pull forward and make some projections here where we can see that you know, we essentially are below the current alpha momentum pool. And anytime we're in the alpha momentum pool, that's, you know, it's kind of like a question mark. You know, we don't really know, are we going to break up or are we going to break down? We're just kind of swimming around in there, just kind of, you know, trying to find our momentum. But currently we're underneath the 4 hour momentum pool. And you can see that we're below the hold momentum threshold, which suggests continuation to the downside. You can see this candle forming here is really trying to push to the downside. We do have a little bit of a supply line going on here that could potentially get us a bounce should we find our way down to 28.7, and then we can do more analysis at that time. We also have a naked candle over here, which we could grab some liquidity. We don't necessarily have to fall this far, and we don't, you know, necessarily have to be supported at that level either. But we'll have to analyze it later on when we get there. Until then, we can see that if we do want to recover this chart and maybe put in kind of a bullish structure, then in order to get a little bit of a double bottom here, we're going to have to pull up very soon. We don't want to lose this candle at 29.250. We'd like to recapture the volatility pivot. The good news is that it's really low hanging fruit, so we could easily grab it and get above the hold momentum so that we would flip it to the up bias, and then we would have to really reconquer this 29,570 level to stop having bears be in control. Otherwise, this is just going to be a bearish retest, and we could probably continue our way back down. To have continuation, we would want to recover 50% of this candle here above this continuation level. That'll flip our MACD bullish again on the 4 hour, and we could just get above 29,790 for a little bit extra oomph that could potentially push us over the neutral point of control at essentially $30,000 flat. And then we'd have some work to do to put bulls back in control, but they'd have a good shot being above the neutral point of control. And yes, you could make support and resistance, and you could use all sorts of methods to look at this, but this is the one that I'm offering, and I think that it tells the story of Bitcoin. It tells the story of our candles quite well if you're able to follow along with that and just willing to learn a little bit. And you know, this is a great supplement to other styles of trading out there. Now, I do have this kind of like a spider line over here, which you know, it just kind of goes back, you know, in this type of an area. I think we have some stuff over here. It might be on the log chart, might be on the linear chart, not sure which one. But basically, we do have this kind of through line, which in my opinion, it's been significant as a supply line here where we got a nice bounce off of it. We tried to bounce off of it and broke under it. And so if we did come up to retest that that 30,000 but ended up losing it, then don't be surprised by that either, okay? Because we wouldn't really have recaptured 50% of this full drop. Even if we recover 50% of this candle, it doesn't mean that we're going to get above the neutral point of control. We could easily get rejected underneath there and just work our way back down. So guys, that's what I'm looking at for that. And part of my reasoning for this drop here, I did show this in the Discords. Guys, there is a link to the Discord in the description of the video below. Please join. We are helping each other out. And when we were over here and we hadn't even touched the top of this red, kind of wedge here, rising wedge, I did suggest that there was a likelihood that we could push up, like actually deviate on top of it and then come back down. And I posted this chart in the Discords, so it was more than a week in advance. And we not only broke up here, but we also broke down almost exactly on the line that I had drawn. And my rationale for this is that we have this CME gap right here at 28,200 on the Bitcoin CME chart. That's the professional charts. It's not the chart that you guys are trading. We also have a couple gaps like over around 35,000. I think that's the one we're trying to make our way to. And then we do have this open gap here around 21,000, which could be something that we come back to at another time. So guys, these CME gaps do tend to get filled, right? You see this drop here during the USDC scare. It actually just filled that gap perfectly, right? And we filled this gap. There was an older gap that we got filled by this wick. And so these things do tend to get filled. And if we just have kind of like a kind of a shakeout to the upside, a shakeout to the downside, and then continue to go maybe for this one, or if we continue to break down and go for this one, that really wouldn't be unexpected. So that's your CME perspective for you guys, and I am trying to integrate it with the the dialogue that I'm creating with you about the regular 24/7 exchanges, right, that you and I use primarily. Let's go ahead and jump to the uh, daily chart over here because we were on the 1 hour, but I was showing you the 4 hour constructs, by the way. The background candles don't matter. I just wanted to show you the detail of it. Let's see. There we go, daily. So now we're on the daily chart and I'm showing you the daily levels. And you can see that we are starting today underneath the alpha momentum pool on the daily chart, where we are actually continuing to push down. It looks like just absorbing this liquidity that I did suggest was possible. In the last episode, I did mention that the 4 hour and the daily did look like they wanted to push down, and that the 2 hour was that the 2 day was actually threatening it quite a bit. But we do see that it is pushing down now, and it is just absorbing that liquidity over here. So for the daily chart, if we do end up bouncing above 28,500, then that wouldn't really be any big deal. Like, we are just kind of stealing this liquidity from people that have stop losses as we've been pushing up, basically liquidating them. The market makers take their money and use that money to push to the upside, right? And to do that, we would have to recover 29,500, and bulls would get back into control above 29,900, and then we're likely to just continue, in my opinion, maybe to 32,000. But if we do lose that neutral point of control, then the bears are waiting at 26,400. I don't really see any reason for us to go there. I do see perhaps teasing this neutral point of control as realistic. If we do drop all the way to the bearish control zone, we could grab a little bit more liquidity from here before turning around and just scaring everyone. But getting trapped under that level would not be a good thing. And look, here you can see live in action, right? We are pushing down as we speak because we are underneath my hold momentum level. And so knowing these levels, again, it's really important. Now, with these tall candles that are just on the move, obviously you can't catch them. But if we are going sideways, then that's when these key levels are really going to be important. Or should we pop up, then these key levels are super important. Otherwise, if we reach a new level, then I just make new key levels to watch. And then as we go sideways, we'll look to see where we are within that context. While we're looking at vertical candles, like the 4 hour and the hourly were kind of sideways. But if we were looking at vertical candles where, they're all aggregated into one massive candle, then we can look at our EMAs. And here you can see that we not only closed below the 9 EMA, which is very bearish and the 4 EMA as they converge here, but we are quickly approaching this 20 EMA, which I was going to say is a target. We're actually headed right for it. And if we did get a bounce off of that on the daily, that would again be perfectly healthy. We quite often test the 20 EMAs, and since we haven't, since really almost a month, it may be just time to do that. We did here, well, that's the simple moving average, but we really haven't gotten a good test of the 20 EMA since really until from March. Okay, and so if we're doing that, then we could even go further. Assuming that this 20 turns down, we could get squeezed down to the 35 or even the 50. Okay, and then I would expect us to bounce. To be honest, I don't really understand why we should hang out down there. I don't really see anything bearish. Um, Logically that's happening, but maybe we're just getting a very big rejection from this area. The only thing is I can't say that we are, right? Clearly we're just exploring this territory right here on the old chart, right? You see these up and down, and currently we're at the bottom. We could bounce from here, or we could explore this really lower level right here. And we do have this kind of wick that really pushes down all the way to 25,000. And so if we are exploring this, kind of an analogy to this range, just on the opposite side of this, we can just call it a W. It's not really a W, but we can just say this rounded bottom. If we're just like doing another shoulder of it, right, basically, then it would be pretty reasonable to touch down into this area, and it would definitely be reasonable to touch down into the neutral point of control over here, because that's what's happened in the past, right? Well, if this asset can do that in the past, then it can do it again, right? And so that's what we're looking here. The only difference is that all of our EMAs were oriented bearishly in this case, and so we continued to push down. In this case, they're oriented bullishly, and so what would that suggest? Well, after some checkbacks, maybe we continue to push up, right? We really haven't made a rounded top or anything the way that we had a rounded bottom. And so I wouldn't expect that we just kill over and die in just like a straight line, right? It would take time to round over and then fall over. Even when we were at the top of the market, right, you can see that this is actually a giant rounded top. Right. Yes, there was this like little water park thing here, but because this was so vertical, it had to have an equal and opposite counter reaction. You see that? So you will get a second chance to get out of your position if we have a massive drop. These things are known as reaction rallies, and see this massive drop right here. Look, counter reaction, right? So what happens is that the dumb money sells at the bottom, and the smart money is probably who tipped the chart over by selling, because they just have so much money. If when they sell, it just causes an avalanche, and then smart money buys again, and then they exit their position here. And just by liquidating everyone over and over and over again, they're able to push the charts up even higher, right? So, and then at some point they're done with that, and then they want to go back to accumulate. That's why we get this kind of lower half versus the top half. This is them taking profits. This is them accumulating and shaking people out of their positions, for profit or for coins that they want to collect. So right now, I think that we're in that mode where the smart money wants to collect your coins and are trying to shake you out of your position. Now, since this is a mid-cycle rally and we can't really guarantee that this is going to be a bull run from here, you can see that yes, we dropped sharply here, and so yes, we could have a counter reaction, even as high as 50K. But this would be just too vertical right away. In the past, you can see we have to put much longer structures to get a nice bull run. And so, if they're accumulating, yeah, we could get a reaction rally here, comparable to maybe this drop. And then maybe we push sideways for a year, and then we go on an epic bull run, maybe more towards the halving, the Bitcoin halving or whatnot. But guys, I'm just trying to share some perspective here that there may be a limitation on our move up, right? But that I don't think that we've totally topped out yet. We'll find out, but I think people are just panicking a little bit too much because they're too used to the bear market. And I do think that we're having a bull run here, which 100% up, that's definitely a bull run, right? I mean, 20% in stocks is a bull run, 40% on Bitcoin is a bull run, and this is like 100% up. So, okay, let's see. We did get some analysis for the daily there. Let's go ahead and jump over to the 2-day so that we can just get some interesting perspective on where we are. And here you can see that we are tapping that bullish control zone of the 2-day almost perfectly here. And we've already broken down from the 2-day volatility point and all of that. So we are exploring to the downside. You can see how important that volatility pivot was. And losing that, we did almost put in a vertical candle to the downside. And now we are really threatening the bullish control zone of the 2-day chart. But again, just testing the 9 is very healthy. And even testing the 20 is reasonably healthy. I don't think that we'll be going below 27,600. Let's just say we have a catastrophic fall. We lose the bullish control zone on the 2-day. I don't think that we'll be going below 27,350 just because we do have this 300 EMA here. And even if we do have the neutral point of control at 26.8, and we also have the 200 EMA at 25.9, so basically 26,000. So I think that that's really the bottom of the chart between 27.5 and 26,000. I don't think we're going to be able to break below that. I just couldn't see it happening. But and right now the bulls are still in control on the 2-day. So if the 2-day closes tomorrow above this level of 29,000, this is still going to be bullish on those higher time frames, you see? And so how can I be a perma bear? It just suggests that we're just taking a dip in the alpha momentum pool, which can confuse people, but it's just a swim, right? And then we're just retesting the bullish control zone, confirming that's still valid, and then we could continue to pop up until this volatility pivot mathematically slowly moves down, and then we reacquire the volatility pivot and do our final push. But that does suggest at least some sideways action because it takes time for the volatility pivot to come down. It doesn't just quantum leap from top to bottom. It slowly works its way down, and then as we push up, it slowly works its way back up. And since we had this huge push, right, if you just look at all these candles on the 2-day, we had these huge push to the upside. The volatility pivot has been pushed too high. We just weren't able to reach it. And so our volatility, our random push of momentum, happened to be pointed down when we got this this volatility smack. Guys, that's enough, I think, for the 2-day perspective. Really, that key level is 29,000. And if we do want to get a little bit more bullish, then we are going to need to reacquire, again, 30,000, which is pretty similar across the board. And right now, our volatility pivot is at 30,450-ish. And so that should be a major target, within the next couple days. But again, mathematically, it will slowly move down. And so it will become easier to catch later on. Should we just be able to go sideways, then we just have to, then after that point, it's just a waiting game, okay? And also the 20 EMA will be moving up if we just hang out in this area. And so if we're just tagging the 20, then again, it could meet us in the middle somewhere around here, right? But this candle is very heavy, guys. Let's go ahead and just take a look at what our EMAs look like on the other time frames, just to see how we're configured here. And you can see that on the 3-day, I think this is very concerning that we do have this 200 simple moving average above our head, like a guillotine, around 32,500. That suggests that we could bump our head into that. That curve down here may actually be what's causing us to move down. It's the 200 sometimes has like a repulsion to it. You don't want to challenge that. And so if we do bump our head on this thing, it could be a hard limit somewhere around 32,500. And lo and behold, that lines up perfectly with these wicks over here, right? And then also this rejection wick over here. And so that would be a good place for us to get a heavier rejection. I'm not really sure why we would get a heavy rejection right here. I don't really see anything too heavy right here. Yes, we've pulled back, but I don't see anything that's just like smacked us down in the past, right? And if anything, we've been accepted to the upside in the past at these levels. So I can't be overly bearish. And then on the 3-day, you also see that the 200 and the 300 are at 27,370. So that does suggest that we have a pretty strong support there. It will converge with the 20 EMA on the 3-day, and those are pretty strong EMAs when you combine them all together. That will be very difficult to break to the downside, okay? Because this thing's going to be essentially squeezing to the upside. And if you want to imagine it, it's going to be sort of like this. Like we just put in an ultimate squeeze, we broke out, right? And now what are we doing? Maybe we come back to retest it, and then boom, maybe that's going to give us the energy to get up to 32, maybe even 35, or maybe the 200 EMA is going to say, nope, time to come back down, right? So we don't know how high we could push, right? This thing could push even higher, but I'm just saying, like, this is a very powerful squeeze that we're seeing here. And if I turn the EMAs off, you can see that our price action has pretty much matched that squeeze formation. And so, the logic is pretty sound there. Also, the 200 SMA doesn't have to be respected. We did push through the 200 and the 300 EMA, so we definitely could push through the 200 SMA, which is a little bit slower. And these ones might be the truer story, and they are flattening and even have the potential to point to the upside. It would be very exciting if these EMAs started to point to the upside, because that would suggest much higher prices, as opposed to them just being sideways or pointed down in the past, right? Where price action matches that. If we do break below 27,400, then we do run the risk of turning our higher time frame, major EMAs to the downside, and then that could pull the chart down fairly deep. So I wouldn't want to see that happen. So again, I don't think that we're going to really break these levels. It wouldn't make sense for the market to accumulate all of this just to dump it like at a few percent higher than what they accumulated it for. Maybe there's some profit taking, right? Because we are at heavy resistance, but I don't think that this full bowl here, right? Like everyone's grabbing the candy down here. The smart money is grabbing the candy down here. I don't think that they just want to give that up. It would have to be a major, major dump, sort of like this one over here. And again, the difference is that back here, all of our EMAs were pointed to the downside, whereas over here, all of our EMAs are pointed to the upside. And so if people want to compare this moment where I was telling people to get out versus this moment where I'm telling people I'm not sure it's going to be that big of a deal, right? I mean, I'm wary only because this 200 SMA is pointed down, but I can see that the 300 and the 200 here are pointed nicely up. And it is true, they were flattening out over here as well, so we can get spoofed on it. But the thing is that in this case, they are backed up by every other EMA. And here, they were being fought by every other EMA. They were being pushed down by every other EMA, okay? So it's just a world of difference from an EMA's analysis perspective. I think that we can jump over to the 5-day to see if we have anything similar here. And we do, again, like right here around 32,500 on the 5-day. So very similar story to the 3-day, just may have another major resistance in that area. And, again, a lot of nice support right here at 27,300 should we come all the way down. Everything pointed up. A lot of very heavy support over here at the 25,000. That's where people are getting that 25,000 number from. But I think that we have support actually higher than that. And so I don't think the bears are going to get what they want. I think this is going to be a shallower dip than people think. Okay. And I think we're not done pushing, but maybe we push up higher and then we do the more scary drop. We did close the weekly, so if we come back to the weekly, you can see we really haven't destroyed this candle or anything. but we do have a massive amount of liquidity over here, prime for the taking at that 25,000. But again, we have a lot of good support above 26 to 27,500. So it will be difficult to access that. And that may be something that we access, on our way back down, right? Where maybe we retest the bottom of the market, right? Something like that if we're going to stay bullish and then we keep going. Or, should we be bearish, then maybe we even make a lower low and get those really low numbers that people wanted. Should there be some black swan event, stock market crash, that sort of thing. Guys, I am going to leave it there. Maybe just for a final note, I'll take a look at the volatility on the daily to see if we've closed it off. And yeah, I mean, if we take a look at our candles versus this push up here, we did close the push to the upside off totally, and now we're just going sideways or down on the daily, but it's really not over yet. Let's look at the 12-hour. The 12-hour is suggesting that this drop is over and that it might be looking for a little bit of sideways or up. How about the 4-hour? The 4-hour, it's not quite done yet. So it had a couple of different waves of pushing down, and let's see, push down, sideways, push down, and it's not quite done yet. So essentially the 4-hour and the daily agree there might be a part 2 of this. Okay, there might be a next wave down, at least sideways, okay, and that there might be a part 2 down. The 12-hour says it's kind of done with it, but it could flip around fast because it's just crossing in the middle of the volatility here, and you can see that since it's just like 40%, 50%, sometimes they do like little screwy little turnarounds in the middle of the chart, like over here, right? So it was pushing up. You think, it looks like it's done, but then it just like reflips, and then it continues to go to the other side. So this one may still end up dropping further, the 12-hour. It just may be kind of tired for right now, which could be why the chart looks like it's stopping right now. But in my opinion, in volatility trading, this could be a little bit of a fake out where it wants to push back up, maybe grab some of this liquidity, or maybe just go sideways to trick people to think it's over, and then it has one more push down, and then maybe that's the real bounce, depending where we go. But so far, we're not really bending these 12-hour EMAs down too hard. And we are really fastly approaching that 20 EMA on the daily, which already we're kind of bouncing off of. And the 4-hour here, that's a nice looking candle, but I don't like how it didn't recover the 4 EMA. That's a really bearish sign to not be able to recover the 4 EMA, but it has a couple hours left. In this configuration, this is basically just squeezing to the downside, okay? And that could be really dangerous. See, this could be a very powerful squeeze to the downside on the 4-hour. And you can see how bulls would be kind of faked out by this pump, right? And so they're just taking people's money. And then look at how bearish these EMAs are over here. It's either going to take a lot of time going sideways to turn around, or there could be another squeeze going to the downside. So that's what the 4-hour and the daily are telling me. And the 12-hour is just a little bit confused right now. All right, guys. I think I'm going to wrap that up there. That's your alpha for the day. Thank you guys for subscribing. Thank you for your likes. It really does motivate me. I appreciate all the insights that you give me and everything that you share in the Discord. Guys, again, there's the link to the Discord, the group discussions in the description of this video. Go ahead and join and tell me what you think. It is free. And since it is still kind of the bear market, right, even though we're having a bull run, of course, we all want to share our best ideas in order to help each other basically obtain financial freedom. I mean, that's what it's all about, right? That was your alpha for the day. Stay safe and happy trading.